What's up, investors? In today's video, I'm going to share with you the shockingly simple investment strategy that allowed me to retire when I was just 35 years old. Now, before we get into the details, let me give you a bit of background. Like many people, I didn't really start seriously thinking about retirement until I was in my late 20s. I had a decent job, but I certainly wasn't making an extraordinary income. And I didn't come from wealth or have any inheritance coming my way. But I realized fairly early on that if I wanted to retire comfortably and potentially very early, I would need to be an active investor and let my money work for me through compound growth over time. So I came up with a straightforward investment approach, stuck to it diligently, and it paid off in a big way. Let me walk you through exactly what I did. The power of compound growth. The core principle behind my investing strategy was to harness the incredible power of compound growth. I'm sure you've heard of it, but let me illustrate it with a simple example. Let's say you invest $10,000 and it grows by 8% per year. After the first year, you'll have $10,800. Not a huge gain, right? But then the next year, that $10,800 grows by 8% and you end up with $11,664 at the end of year 2. Then in year 3, that $11,664 grows by another 8% and you have $12,597. Do you see what's happening? Each year, you're earning returns on a bigger and bigger amount because the returns from previous years get added to the total. This geometric growth continues year after year. So while the gains in those first few years were just a few $100s, fast forward 30 years and that initial $10,000 investment will have grown to over $100,000, all through the magic of compounding. Of course, the higher the rate of return, and the more you can invest each year, the faster the compounding happens. This is why I decided from early on to be an aggressive investor and funnel as much money as I could into investments that could generate high returns over the long run. My three-pronged approach. So what did my investing strategy actually involve? It had three key components. 1. Maximize tax-advantaged accounts. The first part was to take full advantage of tax-advantaged investment accounts like 401ks and IRAs. The money you put into these accounts isn't taxed up front, so you're able to invest more. And the growth happens tax-free until retirement. Every year, I made sure to max out my 401k contribution, which allowed me to automatically invest over $20,000 per year, depending on the annual limits. I also maxed out IRAs when I was eligible. By doing this religiously for over a decade, I was able to build up a very sizable nest egg that just kept compounding. 2. Invest in growth stocks. The second part was to invest primarily in individual growth stocks that I felt had huge upside potential over many years. I devoted a ton of time to researching and analyzing companies in sectors like technology, healthcare, consumer goods and more. I looked for companies with innovative products or services, strong revenue and profit growth, stellar management teams, and massive potential market opportunities. While riskier than index funds, these growth stocks could generate returns of 15%, 20% or higher on an annualized basis if I chose wisely. 3. Use leverage wisely. The third component was to practice simple leverage techniques like buying stocks on margin or using options strategies like covered calls. This allowed me to amplify my returns by investing more than just my cash on hand. Of course, leverage cuts both ways, so I was very disciplined about only using it on my highest conviction positions and setting tight stop losses. But used prudently, it acted as a way to juice my returns and accelerate the compounding process. I know using individual stocks and leverage may sound risky, but I was smart about it and had a high risk tolerance since I was investing for the very long term. The results. So what were the results of this simple three-part strategy? Absolutely incredible returns that allowed me to retire decades before the normal retirement age. By maxing out my retirement accounts year after year, I was able to invest well over $500,000 into the market over about a 15-year period from my mid-20s to late 30s. And because I invested so aggressively in high-growth stocks while utilizing leverage, I was able to achieve annualized returns of over 20% during that time frame. Do the math on that, and the compounding really is earth-shattering. $500,000, growing at 20% per year for 15 years, resulted in a portfolio worth over $4 million by the time I was 35 years old. At that point, even assuming relatively modest future returns, my portfolio could easily spin off $160,000 per year in investment income. That was more than enough for me to leave the corporate world behind and pursue my passions and entrepreneurial endeavors while still living quite comfortably. Closing thoughts. I know what you may be thinking: easier said than done, right? And you're absolutely correct that the level of returns I achieved isn't typical and requires quite a bit of work and discipline. There's no getting around the fact that I had to make investing a major priority in my life for over 15 years. I spent countless hours reading through financial statements, analyzing companies, and managing my portfolio. I also had to resist temptations to forget about the stock market and just spend my income instead of investing it aggressively. And even beyond the time commitment, I had to have the psychological fortitude to stick to my strategy through multiple market crashes and downturns where my portfolio would temporarily plummet in value. It wasn't easy to hold on during those times. But ultimately, it was 100% worth the effort. Retiring in my mid-30s has given me a freedom and flexibility in life that is invaluable. I'm able to pursue my entrepreneurial dreams without being weighed down by a need for a steady paycheck. I get to spend more time with family and on passion projects. And I have peace of mind knowing that I've put myself in an incredibly fortunate financial position. So while I don't expect everyone to follow my footsteps exactly, I do hope that sharing the details of my investing strategy provides some inspiration and motivation. Compound growth is truly an amazing wealth-building tool if you can stick to it and nourish it diligently over many years. If being able to retire much earlier than normal is appealing to you, I encourage you to become an investing devotee and make it a top priority just as I did. You may be amazed at what you can accomplish in your own life. That's it for this video. Let me know in the comments if you have any other questions.